So the moment we've all been waiting for, the day is here, the 18th of September. It is going to be the FOMC decision with regards to the rate cut, and we expect a whole lot of changes within the market. Expect volatility as we lead into the next phase of the crypto bull run. It's all lining up absolutely perfectly in alignment with everything we've looked at over the last couple of months. I'm going to show you exactly why, so stay tuned till the end of the show. I'll show you why big move is brewing. Smash the like button, hit the bell notification, and subscribe to the channel, and let's get straight into the show content. If you look at the bubbles over here, firstly, other than the bubbles look a little bit different, you can see on the hourly it is about half and half. Daily though, still maintaining that green price action with a lot of the coins pushing up, and it is the big day, right? We have the FOMC economic projections, the FOMC statement, and then the press conference. We have to look out to the press conference for what Jerome Powell might actually speak about, which could outline when quantitative tightening may come to a stop and quantitative easing may be ushered back into the markets. That's what creates those parabolic advancements that we've seen back in 2017 bull run, as well as the 2020 into 2021 bull run. And I know that's what you're all here for. That's what you're all waiting for. You're waiting for that big expansive move. Now, if you look over here, the target rate probabilities has actually jumped from only one rate cut at 25 basis points and a 37% probability now to 63% chance that it will be a 50 basis point rate cut. So looking at the bigger side, even some of the politicians have been coming out and saying that they need an emergency 75 basis point rate cut. But I do find that hard to believe. And the reason why is the stock market continues to trend up towards new all-time highs, and that creates a difficult environment for them to justify such massive cuts. So let's see, it's going to be interesting. It's coming out later on today. Let me check my time. It will be at 10 p.m. Okay, so it's going to be very late. Probably won't be able to see that live, but I'll look in the morning and we'll see what happens. Now, this is why you need to pay attention to the speech that occurs afterwards, the FOMC press conference, to see what Jerome Powell may actually insinuate. And the reason why is if you look at Thomas's post over here, he says he's expecting a Fed liquidity crunch over the next 2 weeks. And there's a couple of different reasons why. They spoke about when the bank reserves get a percentage of GDP, then that's likely when they'll stop the quantitative tightening. So if you can see, if it reaches below, well, we're reaching currently below 11% for several days. The reason it's important is because this is the measure which they use to dictate when the Federal Reserve will stop quantitative tightening. And that was actually labeled by Fed Governor Christopher Waller, which occurred in January this year, 2024. It is 2024, right? Yes, it is. And he said that if we approach at 10 to 11% of GDP, that would be an approximate end point for draining the reserves out of the system. In other words, stopping the quantitative tightening. For those of you out there who don't know what I'm talking about, quantitative tightening is where there is tight monetary policy, which means there's less money to go around, and it's very, very difficult for the markets to rally in that type of environment and to have a risk-on rally, right? The risk-on rallies come when you go into quantitative easing. And you can also see over here, the New York Fed Open Market Operations report released earlier this year stated that quantitative tightening was projected to stop when the reserve share of GDP reached approximately 11% for a higher reserve scenario or 9% for a lower reserve scenario. So again, why is that important? Well, that's your US bank reserves. That's where it's currently at. It's hovering around that 11 to 12% level. And this may be indicative that something could be coming around the corner, right? If there is quantitative easing, or even if just quantitative tightening stops, this will bode very, very well for the risk on assets. So expect that they will mention it. They're not going to necessarily enforce it now at this exact meeting and announce it, but they will speak about it at least, in let's call it hidden terminology. So watch out for that. The other thing you want to look at over here is the global M2 money supply, which is keeping on towards the upside. And look at that massive tight correlation that you have between Bitcoin, which is in pink, and then the M2 money supply in black. M2 money supply going up, Bitcoin slightly lagging, stock market going up, gold going up. So will crypto play catch up? And I am betting on yes, that it will. So a lot of things to look forward to over there. You can see over here, if you look at the USD stablecoin supply, this is now on a monthly time frame, and you can see pretty much since the lows over here, it does move before the liquidity, right? At least in the USD liquidity. So it has been trending towards towards the upside, but you have the net USD liquidity, which has been choppy. So this still needs to get a strong trending move to get Bitcoin moving up. We also have the People's Bank of China, which has got random injections of liquidity sporadically over time, and this one hasn't had any for quite some time. So keep an eye on that after the rate cuts do take place. This tends to happen globally, not just in the US. They tend to cut all at the same time, and that could bring new liquidity in all markets. So stock market, very, very strong. S&P 500 pretty much ticked up to all-time highs already yesterday, coming back a little bit, but probably going to have a new closing candle at all-time highs. There's absolutely nothing bearish about that. And I told you about that. I spoke about that a whole lot, saying that this is most likely the major low on this wick over here. And we actually went long over there. And we did get taken out because it's a high leverage trade, but we got stopped out in major profit. And then I said, watch for the next high low to form. And that was it, right? Same thing on the NASDAQ over here. This was the next high low. I told you that it's not really to worry because the 200 weekly moving average is most likely going to hold the support and bounce price off over there. And that's exactly what happened. Dow Jones Industrial Average also trading up at all-time highs. Coinbase Global is slightly lagging. This one probably presents a good opportunity to establish a longer-term position. Now, we've also spoken a whole lot about not only the rate cuts, but the effectiveness of how the markets rally around the election phase. So I'm not going to go too much into this. You can go back on the chart and have a look. That's your Obama era. Here's your Trump 2016, 2017 election phase. Here is your Joe Biden and 2020 election phase. And now we're about to go on this blue line into the next election phase, while price is still following this bullish chart pattern over here, which can be viewed in one of two ways, right? The two ways are either you're viewing this as a absolutely enormous cup and handle formation, which it does meet to TA perfection, or you can view this as a very, very big bull flag, right? Waiting for the breakout. Either way, whichever way you want to slice it, it does look like bulls should be taking back control soon, and we should be looking at higher prices, especially around that US election phase, which begins on the 5th of November. So pay attention to that. VIX still recontracting towards the downside, causing the stock markets to rally. We're still waiting for the acceleration phase and the proper breakdown on the DXY, which we labeled over here at 100.55. 100.55 is the level to watch. If we can take out this level over here, you should see rapid acceleration towards the downside for the DXY, and that will create a big rally for crypto markets. Now, a lot of people are sidelined. They don't even pay attention to any of these things, which is why it's important. Stay here each and every single day. Don't leave when it gets boring, because this is where the real money is made, by establishing those strong positions right now. So if you're one of the OGs, you've been here for a long time, which I believe most of you have, smash the like button. Let me know in the comments as well. How long have you been watching the show for? All right. Low volatility over here on the BBWP, also recontracting, just giving additional signs that a big move is brewing. And then this is probably one of the biggest reasons to at least pay attention, because as soon as we start to get a candle close above this support resistance flip, because we failed every single time. We've got no candle closes on a 2-month or monthly scale above this level. If we can start to close a 2-month candle, which is going to be closing in the next 1 month and 14 days, which means if October is bullish and we get a strong October close, well, that would probably be the sign that you have officially flipped this high time frame level into support, right? The previous resistance now flipped into support, and that creates a massive springboard for higher prices. You can also see over here, we have the stochastic RSI turning towards the upside. We've spoken about this a whole lot and the significance of it. We actually measured out all of the various different times that we came into those low regions and started to turn towards the upside, and what the percentage gain was off of each of those times. Out of 13 reads, 11 were successful with double-digit to even triple-digit gains, and only 2 were failures, right? So if you look at this current price action over here, the good news is that if the stochastic RSI does play out like the 11 of the 13 times previously did, that should get you above the 21 weekly exponential moving average, which is a very, very simple proxy for whether to be bullish or bearish. If you are below it and it's angled towards the downside, you can be bearish or cautious, right, on your longs. If it's angled above it and the 21 EMA, or if price is above the 21 EMA and it's angled towards the upside, well, then you can be bullish, especially when you start to factor in the timing cycles, which I've really driven into you guys over the last couple of weeks to months. And I believe that driving that into you will make you much more prepared for what's to come and hopefully wealthier, because that helps you to understand when to take these signals less seriously, because it depends on where you are within the timing cycle. Where are we within the timing cycle? Our belief is that we are only halfway through this bull run, and we're looking for much, much higher prices in the weeks and months to come. And this has been the inflection point, which I outlined. You guys know how much I've driven this into you guys. This inflection point over here is where we said the action should start to take place. Prices should start to reclaim key levels, and we should have a slow grind towards the upside. And probably by the time we get into October, we should start to see rapid acceleration where the bull run really starts to take off. Feel free, screenshot it, quote me, snippet the video, reshare it. If I'm wrong, I'm wrong. I'll fall on my sword. It's fine. But at the end of the day, I'm studying the evidence, and this is what it suggests to me, is that this is most likely going to be a buy the dip opportunity, looking for higher prices. We've hit the 6-month mark, taken from the all-time high to the low, and we said that typically these corrections last around 4 to 6 months. There have been times in the past where we've seen 9 months, so it is possible. But at the end of the day, the chances of a 9-month correction are very, very low at this point in the cycle. The probabilities are much more in your favor if you're looking for high prices. We also spoke a whole lot about the Wyckoff accumulation schematic in play, whereby this would have been viewed as the spring phase based on the sweep below the bottom of the range, the high volume, and then price reclaiming key levels. And now we're transitioning into the next phase of the market cycle, which is where you start to see the signs of strength and the markup phase take place. So if the Wyckoff accumulation schematic is in fact correct, and this is in fact what's playing out, then the expectation would be that at some point in October, we should see that sign of strength, and we should start to take out the range highs. And that's where you have your markup phase, which leads into the next big trending move. And your job here is to catch those trending moves, right? So there it is. You can see we currently the green trajectory, slightly lagging what we saw in the prior cycles post-halving, right? This is the return on investment from the halving cycle. Now, if you also have a look at it from another viewpoint, we can look at the return on investment from cycle bottom. Let's remove cycle 1 and 2 because of diminishing returns within the market. And therefore, this is the expectation, right? This is part of the reason for the belief that we're in that chop phase, as I've shown over here, and we're looking for rapid acceleration. And this is what you would have to look forward to for the rest of the market cycle, is a continued grind towards the upside. And you're looking for the cycle to end somewhere around 1,000 to 1,080 days later, right? Marked it off on this chart. I may have. Let's just quickly see over here. There it is. 1,060 bars from the market cycle bottom to where the end of the cycle could come into play would be October 2025. Screenshot it, snip it, clip it, share it, do what you want. That's the call, right? That's the call. That's what I'm looking at. Of course, as a trader, we will adapt to probabilities. In other good news, I see many of you have already started to identify it. What we have in play over here is currently the next bull moon, right? Now, again, feel free to go back in time, test this out for yourself. It has a very, very high hit rate. What's more important is it lines up with everything else that we're looking at, the breakdown of the DXY, the potential rate cuts, the potential drop in quantitative tightening and move into quantitative easing, the election phase. We have the stock markets at all-time high, so the catch-up trade for Bitcoin to the stock markets and gold breaking out also to all-time high. Plus, we have price breaking above the key levels, the 9 and the 18 exponential moving average crossing bullish. And now, just to top it off with a cherry on top, we have the bull moon, which is just printed today, which means that over the next 2 weeks, we're looking for higher prices, right? And that's typically the way that I treat this, is just a little bit of an opportunity for bulls to take back control. They won't have full control until they take out this level over here, which we've spoken about. It's getting above $65,050. So what this means is, with the bull moon present, with all these other various factors, this just may give the bulls the opportunity to get price to break above here. And if they do, that's where the sentiment starts to shift very bullish once again. And then you could look to buy the next high low, right? So you see that as high low, high high, and then you look to allocate into this point. That is if you're conservative. If you're somebody that's scared, you're conservative, you're waiting for full confirmation, that is your plan, right? You can be player B, waiting for that. Personally, I'm player A. I'm pretty aggressive, and I've been looking for opportunities into this zone over here, and that's pretty much been the plan of action for the trades, right? Now in Whale Room, which is the private Discord, of course, we have a lot of different traders in there, guys. Not just me. I do outline my plans, but you can see over here, we have scalpers. Look, this is Farouk looking at RSR, taking the trade over there. And there's the progression of that trade, full profits, 50%. We also have Christo Columbus, 66% on Phantom, 70% of Theta, 269% on PopCat, and a whole lot more. There's tons of traders in there, guys. Jump into that group if you want to make profits on the daily, and if you want the longer term playbook for how I've at least taken, I mean this humbly, but I've taken thousands of dollars into millions of dollars using all these various different strategies. And I do outline exactly what I'm doing in Whale Room for the longer term traders that are playing the full cycle. Okay, so if you do want that info, it is in Whale Room Discord. There's a link below which you can use to get in. All right, you can see the 4-hour trend starting to shift towards the upside, higher highs, higher lows. Still waiting for the golden cross over here. We're still viewing this very much as a ranging market, but at least this should start to break price above the mid-range level at 62, and then once you can target above 65.5, you can expect that you should come for the top of the range here. And if you get above this with the golden cross present, which should be the case, that's where you should see new all-time highs, right? Price should start to move up very quickly. Similar to Bitcoin, if you look at the total market cap over here, we know that we have the cup and handle formation, which is also a bullish chart pattern, and we have price starting to reclaim these key EMAs, right? We have the 3, the 9, and the 30. We're back above the 3 and the 9. We're still waiting for these to cross up. So there will be a little bit of chop around here expected. Expect that the rally into 2.2 trillion on total cryptocurrency market cap likely pulls back price a little bit. But then that becomes the final opportunity, probably before breaking out higher. And then what do you expect next on the total cryptocurrency market cap? Similar to Bitcoin, following the halving cycle, you kind of grind slowly onwards and upwards, and then you get rapid acceleration. Here you can see as well, grind slowly onwards and upwards, and then you get rapid acceleration. Following the halving cycle, because of the ETF demand, I believe that was one reason we made all-time highs actually before the halving actually took place. Now you are looking for a grind down over here because there's a little bit of profit taking, and then we still expect the rapid expansion. Demir is asking where Discord. The Discord is right over here. Just click on this, go through to the bottom over here. There it is, Whale Room. So you want to click that exact one, click Whale Room. That will take you through to the Discord. Okay, let's continue on over there. For the rest of you, by the way, if you feel that you've already got a lot of value from the Discord and you haven't yet done Whale Room, I highly recommend that you, or Whale School, I highly recommend that you jump into Whale School. This one is entirely free. You don't have to pay anything for Whale School. It's my gift to you guys. 7 days, 5 hours left to join. I teach a whole lot in Whale School, liquidity, range trading, trend trading, various different strategies, how to read the different market cycles, support, resistance, moving averages, EMAs. Pretty much everything that you need to know to succeed is in Whale School. Use the link in the description below. All right. Unfortunately for the /ETH-maxis, the capitulation continues to occur. At this point, I'd pretty much labeled it as a capitulation on ETH-BTC. It's just getting absolutely pummeled down to 0.0385. You do have your major support, which is coming in. This is not a horizontal support, so I don't take it too seriously, but price has been respecting this falling wedge formation for quite some time. That will be your third test of that level, and that's at 0.037. So the capitulation's intact. Watch for a little bit of support over there. If you look at the USD pair, which is on the right-hand side, though, you are still putting in a potential higher low. The break of structure will occur if you can break above 2,443 for ETH USD. So those are the levels that we're looking at over there. Let's talk a little bit about some of the altcoins and have a look at some of these altcoins. If you have a look at this over here, you can see from JP of Thorchain. This is the founder of Thorchain. This is crazy, guys. This is like a Michael Saylor-esque type of move. He says, got approval to run a fully licensed fund with self-custody of Rune for nodes. Now I can go and raise my own Thor-centric fund, and then he can put the money in, buy Rune, run nodes, access yield, simple as that. He says you're not ready for a founder trying to buy their own asset instead of selling it. He says he likes a challenge. Part of the reason why he burned 60 million standby reserve, nobody should have access to that much. So it was handed over to the protocol so everyone owns it. And LFG, let's go. So interesting stuff. If you look at the Rune charts over here, this is what Rune currently looks like. The question is, are you going to fade that? You don't have a breakup structure yet with higher highs, but you do have high lows in the making. 1, 2, and potentially the third one over here. If you break the neckline over here, this is a W formation, and you would have higher targets in mind, right? Then you can start to look to the order block, which is coming in at $6. And if this can start to at least reverse this whole trend, I do think Rune could be one of the top contenders for the next part of the cycle. So that's definitely one that's on my list. Whenever we look at Rune, we always have to look to 𝗕𝗢𝗡𝗓. Not because there's any relation to each other, just because you guys always ask me in that order in the comment section. I don't know why. You ask for Rune, and then you always ask for 𝗕𝗢𝗡𝗓. So let's have a look at 𝗕𝗢𝗡𝗓 over here. Here's 𝗕𝗢𝗡𝗓. It's not bad. It's in a falling wedge. It is coming into major support. The only reason it's not bad is because it's coming into major support and it's in a falling wedge, which means you have kind of two factors at play, two at least bullish biases at play. So I'd watch as it comes down into the 17 zone. That could be an area of interest to allocate, and you're looking for the break of this, which would look something like this, right? Pretty much as according to my LARP lines, and then you can look for higher prices. But keep in mind, this is still downtrending. Naturally, falling wedges will be downtrending, rising wedges will be uptrending. What you need to identify is as it approaches the apex and starts to look for signs of reversal. We don't have any divergences yet with the momentum oscillator. Maybe we'll get one when it comes down into the zone 16, 17. That's the area of interest. And then I would expect a reaction out of that zone. So 𝗕𝗢𝗡𝗓 is another one for the list over there. You guys know, the other coins that we have on the list. Of course, we do have Casper. We've allocated long on this on spot as well, and it is continuing towards the upside absolutely beautifully. This is still the trade. This was given ahead of time live in the Whale Room Discord. Solana is the other big position that we have, kind of lagging over here, so definitely want to keep an eye out on, especially going into the Breakpoint conference. But if it can push up and reclaim above 160 over there, you should see momentum shift. Another one to keep an eye out on, which I do have in my portfolio, is Sui, right? Really approaching the top boundary over here. I wouldn't be longing at this point. I'd wait for the next major pullback, set in a higher high, pullback for the next high low, and that's where you're going to buy is on the next high low. Injective starting to breach out of the falling wedge formation over here, similar to 𝗕𝗢𝗡𝗓, right? Coming into a major level of support, reaching near the apex of that level. And you can just imagine if ETH BTC, which is also in the same pattern, starts to break out of these levels, you should see big moves over here. So those are some of the top contenders. Let's see, near similar pattern, right? Approaching support over here, but still I'd wait for this to possibly come a little bit lower. If it can start to break out, it should get moving. So those are ones that we're looking at. The other ones that we have in our portfolio over here is Mantra, right? Mantra back testing perfectly into the prior range high breakout level, holding that as support, and that will be a good sign. If it can start to reverse from here, that will start to look incredibly bullish, and you can look for higher prices. Okay, quickly touching on Rio. We're still in the trade over here. This is the Rio trade. Also was given in Whale Room. This one, well, we went up as high as 56%, 57% without leverage. I was on 5x long on this, so 250, 270%. Currently, even with the pullback in play, still up 35% without leverage on Rio. Now, this is more short-term trade, not necessarily the longer-term one, but I like Mantra for the longer-term list. I have that one in the longer-term list. Now, let's look to some of the AI, because AI is starting to heat up. Same thing as yesterday, right? 𝗕𝗢𝗓, look, I would love to see a bit of a pullback over here, but this thing could easily start to break out. I can see attention and eyes are starting to move back towards 𝗕𝗢𝗓, especially with the strong candle that occurred yesterday. So we'll have to keep an eye on that. I'm not yet allocated into 𝗕𝗢𝗓. Okay, I'm keeping an eye out as well on EOS. I definitely think not a bad area to start at least DCAing into. Let's see, Render. Also, Render not looking too good yet. It's kind of choppy and all over the place. But if I do get, sweep back down into this wick over here, for the inefficiency, that's at $3.72. I do think that's a solid area to allocate a little bit. Okay, meme coins, just a quick browse over the meme coins, just at the percentages over here. Anything standing out? Not really. Meme coins more or less in the same place. All right, we can have a look at some of the coins that maybe you guys are requesting over here as well. Let's quickly see how's Cubic doing as well. Okay, still in the middle of no man's land, not too great yet. That is one I'm interested in for the long run, but I don't know if the market will catch on onto it yet. Rollbit, let's look at Rollbit. Okay, so this is Rollbit. We spoke about it. The 0.382 fib level is a key zone. When you break that long-term downtrend, which it has, then you expect if it is going to start a strong trending move, it should respect the 0.382 fib, which is the orange line, which is exactly where it hit, right? It held that level, started to push up over here. That could now be the next high low with continuation onwards and upwards. By the way, if any of you want to trade any of these coins or you want to buy them even on spot, there is an initiative currently with CoinW. If you use the link in the description below, it will qualify you for up to $50,000 share in USDT or $50 million in 𝗕𝗚𝗕𝗄, right? There's 22 hours left, or 22 days, excuse me, left for this initiative. If you use the link below, everything is listed below in the terms and conditions, but pretty much for $100 or more that you deposit, they'll give you a 5% super bonus rebate. So you're getting 5% on top of whatever you deposit, but it's limited to $500. So you won't get any more than $500 on that deposit. So use the link below. Let's look at HNT. How's HNT doing? Okay, starting to pull back over here. This is an important zone. If HNT is to remain bullish and needs to hold this, of course, you know, the trend starts to flip back down. If you break below this line, I'll make it in yellow. There we go, $6.13. That's going to be a break of structure towards the downside. Then you have to look for lower highs. So do be careful of that. All right, let's go PopCat. Let's have a look at PopCat. How's PopCat doing? Still good, right? Consolidating near those highs. Could be soon leading into the next big breakout. Look at my trash coin. I don't know what it is. You got to drop it in the list there. Okay, 𝗕𝗘𝗣𝗕𝗣. We can have a look at 𝗕𝗘𝗣𝗕𝗣. All right, 𝗕𝗘𝗣𝗕𝗣𝗕𝗣𝗕𝗣. Let's see. How's 𝗕𝗘𝗣𝗕𝗣𝗕 doing? Okay. So 𝗕𝗘𝗣𝗕 did get a break of structure, higher high for the first time in a long time. You do also have a higher low over here, and you've come into the key level. Let's just look left to just make this a little bit tighter, see if there's any better levels that we can look at. So definitely a key zone. You want to flip this. If you can flip this part into support over here, that'll be looking good for continuation. I would like to just quickly view this with the fib over here. Let's just see. So coming into, it is hitting the 0.382 right now, which is what I mentioned. That's important for those strong trending moves, right? So if it is going to form a high low somewhere around here, I think then you might see continuation of this trend. So I'd probably be looking for something like this. Let's just grab our arrow. It's busy coming down, possibly into the 0.5, and then start to find support and push up. That's what I'd be looking at on 𝗕𝗘𝗣𝗕𝗣. All right. Okay, what else? IMX. Let's have a look at IMX. I think the gaming sector is probably still suffering. Last time I looked at it, I mentioned to you guys that, you know, this sector is probably going to struggle for until the end of the year. I think I said 3 months at the time, so that puts it into December. But yeah, these are your levels. That was the last level to break above. Now you can start to sense at least a shift in momentum. If you get above the green line, we can drop that ever so slightly. So that's $1.15. That's the key zone. That's the key zone to reclaim. So that's it from me, folks. I'll see you all on the next one. Love you all madly. Jump into Whale Room and Whale School. It's free, right? I'll see you all on the next one. Have a great day and cheers for now.